You just got declined, not for a mortgage, not for a car, for a credit card you didn't even really want. And the number they showed you, that 3-digit number that somehow determines whether you're trustworthy, it just sat there on the screen like a judgment you didn't get to appeal. And here's the thing, nobody tells you. You already knew it was coming. Some part of you knew, and you applied anyway, because you were hoping the system had updated. That maybe whatever happened 3 years ago had faded enough. That maybe this time the math would finally be on your side. It wasn't. So now you're sitting with that familiar feeling. Not rage, not even sadness. Just this low, quiet weight. Like disappointment that's been there so long it stopped announcing itself. Let's talk about how you actually got here. Not the polished version, the real version. There was a period, maybe it started with a job change, maybe a relationship that ended, maybe just a season of life where everything cost more than you planned for, and you started paying things late. Not because you didn't care, because you were managing, you were juggling, you were doing what people do when the money runs out before the month does. You robbed Peter to pay Paul, and Peter eventually sent it to collections. Or maybe you were younger and nobody explained to you that a credit card wasn't free money, that the minimum payment was a trap designed by someone who understood compound interest a lot better than you did at 19. You paid the minimum for 2 years, and somehow the balance went up. Or maybe you co-signed for someone you trusted, and they stopped paying. And now their decision lives in your credit report like a scar that belongs to someone else. Whatever the path, here you are. And the system, the beautiful Byzantine, deliberately opaque system, has decided what you're worth. Here's what makes this particular trap so effective. It compounds in both directions. Bad credit makes everything more expensive. Your car insurance, your apartment deposit, your interest rate on the loan you have to take because the good rate was reserved for people with good credit. You pay more for being poor. You pay more for having struggled. The system charges you extra for the crime of having had a hard time. And those extra charges make it harder to recover, which keeps the score low, which keeps the charges high. It's not a ladder, it's a hamster wheel with a monthly fee. And the worst part isn't the money. The worst part is what it does to your decision-making. When your credit is damaged, you start making choices from scarcity. You take the apartment you can get approved for instead of the one you actually want. You keep the job with the mediocre pay because at least it's stable, and you need stability right now. You stop applying for things. You stop raising your hand. You learn to manage your expectations downward because the world keeps confirming them. 3 years of that becomes a personality trait. 5 years of that becomes a worldview. You didn't just lose points. You lost the version of yourself who assumed the answer might be yes. Now here's where it gets interesting. The credit repair industry is a $30 billion industry. $30 billion spent every year by people trying to fix something that, in many cases, could be fixed without spending a dime. Let that sit for a second. Companies charging you hundreds of dollars a month to do things you are legally entitled to do yourself. Things that take, at most, a few hours spread over a few weeks. Things that the credit bureaus don't advertise because confusion is profitable and clarity is not. Let's talk about what the bureaus actually are, because most people don't understand who they're dealing with. The 3 major credit bureaus, Equifax, Experian, TransUnion, are not government agencies. They are private companies. For-profit corporations whose business model depends on collecting your financial data and selling it. They are not on your side. They are not neutral arbiters. They are data brokers who have been handed enormous power over your life and face almost no meaningful accountability for errors. And there are a lot of errors. Studies have found that somewhere between 20 and 30% of credit reports contain errors significant enough to affect the score. 1 in 5 Americans has a mistake on their credit report that is hurting them right now. Not a minor discrepancy, a real score-damaging error that is costing them money on loans and opportunities they never even knew they lost. Most people never check. Most people never dispute, because nobody told them the process existed, or they tried once and got confused, or they got a form letter back saying the item was verified and assumed that meant they'd lost. They hadn't lost. They'd just stopped playing. Here is what the bureaus don't publicize loudly. Under the Fair Credit Reporting Act, you have the right to dispute any item on your credit report that you believe is inaccurate, incomplete, or unverifiable. When you dispute, the Bureau has 30 to 45 days to investigate. If the creditor cannot verify the information within that window, it must be removed. Not hidden, not flagged, removed. Creditors, especially debt collectors who bought old debt for pennies on the dollar, often cannot verify accounts within that time frame. The original documentation is gone, the company changed hands, the records weren't transferred, the dispute window closes and the item disappears. This isn't a loophole. This is the law working as designed. It's just that the companies profiting from your confusion would prefer you didn't know it this clearly. Let's talk about the mechanics, because this is where most people either get it or they don't. Every year, you are entitled to a free credit report from each of the 3 bureaus through annualcreditreport.com, not from the Bureau's own website, which will try to sell you a monitoring subscription. The federally mandated free report. You pull all 3. You read every line. You are looking for 4 specific categories of problems. First, accounts that aren't yours. Identity theft happens more than people realize, and sometimes it's not dramatic. It's a store card someone opened in your name 5 years ago that you never knew about, now sitting in collections. Second, accounts reported incorrectly. Late payments that were actually made on time. Balances that are wrong. Account statuses that haven't been updated after you paid them off. Third, duplicate accounts. The same debt listed multiple times by different collectors, each one hurting your score as if it were a separate incident when it's the same original debt. Fourth, outdated information. Most negative items must fall off your report after 7 years. Most bankruptcies after 10. If something is past its expiration date and still sitting on your report, it has no legal right to be there. You write a dispute letter, not an email, a letter sent certified mail with return receipt, to each bureau separately for each item you're challenging. You are concise. You are specific. You cite the item, explain why it's inaccurate, and request its removal. You include a copy of your ID and proof of address. You keep copies of everything, and then you wait. If they remove it, your score goes up and you move on. If they come back saying the item was verified, you are not finished. You now write directly to the original creditor or collection agency requesting validation, proof that the debt is yours, that the amount is accurate, that they have the legal standing to collect it. Debt validation under the Fair Debt Collection Practices Act. Different law, different leverage. A significant percentage of collection accounts cannot survive a validation request. The paper trail is broken. The original creditor is gone. The 4th company to buy the debt has nothing but a spreadsheet, and a spreadsheet is not legal validation. This is why the process works, not because of magic, because documentation decays and the burden of proof rests with the people trying to damage your score, not with you. Now let's talk about the part of this that nobody frames correctly. Dispute removal is one lever, credit building is another, and most people try to pull one without the other, which is like draining a bathtub while the faucet's still running. While you're disputing the negatives, you have to build positives simultaneously. The system rewards something called credit utilization, how much of your available credit you're using relative to your limit, and it rewards payment history, which is simply whether you pay on time. These 2 factors make up the majority of how your score is calculated. If you don't have a credit card because your credit was too damaged to get approved, you get a secured card. You put down a deposit, $200, $300, and the deposit becomes your credit limit. You use it for one small purchase a month. A tank of gas, a grocery run, something you were going to pay for anyway. And then you pay the full balance before the due date. Not the minimum. The full balance, every month. After 6 to 12 months of perfect payment history on that card, you apply for a regular unsecured card. You request a credit limit increase on the secured card. You are building a history the system can point to and say, this person pays what they owe. Here's the version of this story most people don't hear. There's a man, call him Marcus, who was sitting in almost exactly the situation you might be in. Collection accounts. A repo from 4 years prior, a credit score in the low 5s. He was 34, making decent money, but locked out of every financial door because of a stretch in his late 20s when things fell apart faster than he could manage. He spent $200 a month for almost 2 years on a credit repair service. They sent the same letters he could have sent himself. They got some things removed, not everything. His score crept up slowly. Meanwhile, the monthly fee came out of the money he was trying to save. When he stopped paying the service and started doing it himself, he understood the process in a week. He'd read it, he understood it, and he executed it. Within 14 months of handling his own disputes, getting a secured card, and keeping his utilization below 10% on every account, his score crossed 720. He qualified for a mortgage rate that was nearly 2 points lower than what he'd been quoted the year before. On a 30-year mortgage, that 2-point difference cost him, by the time he ran the numbers, over $60,000. $60,000. That's what the confusion cost him. That's what not knowing the process cost him. Not the debt itself, the ignorance about how to fight it. Let's talk about timeline, because this is where people either get hope or they get impatient and quit. A credit score can move meaningfully, 30, 40, 50 points, within 90 days if you execute the process correctly. Disputed items removed, a secured card opened and used responsibly, an existing balance paid down. These 3 actions, done together, create compounding upward pressure on your score in ways that most people don't believe until they see it on the report themselves. Is your score going to go from 520 to 780 in 90 days? No. But it might go from 520 to 580. And 580 might get you the secured card. And the secured card gives you payment history. And 8 months of payment history, combined with the removal of 2 collection accounts, might take you to 640. And 640 opens a different set of doors than 580 does. You're not building credit. You're building evidence. You're creating a documented argument that you are trustworthy. The system is not emotional. It responds to data. So you give it better data. There's something deeper happening here that the credit conversation usually skips over. Your credit score is, in one sense, a number. In another sense, it is a story the system tells about you. And like all stories, it can be rewritten. The question isn't whether the story is fair. It often isn't. The question isn't whether the system is just. It largely isn't. The question is whether you're going to sit outside the story being told about you or whether you're going to walk in and start editing it. Most people are passive in this process. They assume the report is accurate because it's official. They assume it's permanent because it feels permanent. They assume that what happened to them is just what happened, and now they carry it. But the report is maintained by human systems, which means it has human error rates. And it is governed by consumer protection law, which means you have human rights within it. The fastest credit repair in the world isn't some secret algorithm. It's a person who actually reads their report, finds the errors, disputes them with precision, and builds positive history while the disputes are processing. It's boring, it's methodical, and the financial industry has spent considerable effort making you believe you need professional help to do something that is, at its core, a paper trail exercise that any careful adult can manage. You have probably been the careful adult who managed much harder things. Think about the documentation you've gathered for a job application, the paperwork you navigated to get your kid enrolled in school, the research you did when you needed a doctor and couldn't afford to guess wrong. You know how to find information and follow a process when the stakes feel real enough. The stakes here are real enough. Think about where you want to be in 3 years. Not the version of the answer you give when someone asks. The actual answer. The house or the apartment you'd actually want. Not the one you can get approved for. The car that isn't costing you 3 extra points of interest because your score was too low to negotiate. The small business loan that would let you stop trading time for money that never quite adds up to enough. All of that lives on the other side of a number that you have more control over than you've been led to believe. The system did not design this process to be clear to you. Clarity would mean fewer people paying $30 billion to services that are largely doing what you can do yourself. Confusion is a revenue model. Your not knowing is somebody else's business plan. So this is what knowing looks like. Pull your reports, read every line, dispute every error in writing through certified mail. Request validation from any collector who pushes back. Open a secured card if you have nothing positive on the report. Use it for one small thing a month and pay it in full. Request credit limit increases when the time comes. Keep your utilization low. Let the history accumulate. That's the process. It's not fast by the standards of someone who wants it fixed tomorrow. It's faster than the standard timeline by any measure, if you actually work it. One more thing. There are people who will read all of this, understand all of it, feel that clarity that comes when something finally makes sense, and then do nothing. Not because they're lazy, not because they don't care, but because the gap between understanding and action is where all the versions of your life you haven't lived yet are sitting, waiting. The version of you who checked the report but didn't dispute anything because it felt like too much. The version of you who opened a secured card but forgot to set the autopay and missed a payment and decided the whole thing was pointless. The version of you who started and stopped and started and stopped until starting felt like a lie you were telling yourself. Those versions are available to you. They require no effort. You can simply not do this and they will find you. But there's another version, the one sitting across from you right now as a question. The one who pulled the report this week, wrote the first letter this weekend, made the small inconvenient choices that nobody will applaud, that won't feel like progress for months, that will feel entirely worth it when the number moves and the door that was closed opens. Nobody's coming to fix this for you. The bureaus are not going to audit your file out of goodwill. The collectors are not going to call and offer to remove items as a courtesy. The system will sit exactly as it is, reporting exactly what it's reporting, charging you for the score you have until you go in and change what it has to work with. That's not pessimism. That's the cleanest possible version of good news, because it means the fix is in your hands, your move.